welcome back. It's a Money Monday edition of Liquid Lunch on Newsmax TV. I'm John Tobacco, coming to you live every day, Monday to Friday, 12 to 1 Eastern, here in New York from the Question Tequila Studios. The food's out, the liquor is here, and when we're talking money, we bring in the big shots, the big hitters, the heavy hitters, like Tom Couglin from BCB Bank, who joins us again. Tommy, thanks for coming down, joining us in the Liquid Lunch Studios.
Thanks, John. Thanks, Frank, for having me back again.
So, Tom, a lot of chatter last week. What's going to happen with the Fed? The market was uncertain. The governors got together. They talked it through, and they came out. They removed the word patience, but they also said they may not have to do anything right here. So, unchanged, maybe one cut before the end of the year. What does that mean to you guys at BCB and those at home who are savers?
Well, in the banking world, John, the market looks at a rate cut as less profitability for the banks. But in reality, for regional banks, is that it's a boom for business. People investing in their own communities, the mom and pops, which is our bread and butter in banking. So we have no shortage of construction loans and no shortage of C&I loans.
So you, on some level, I've been talking to our audience for a couple of years now about the fact when rates were down like by zero, and the banks can go to the Fed and borrow money for zero and buy treasuries and get a 2% return, that there was no incentive to actually lend to small businesses. Is there something to be said for the rates being a little higher where you guys will take a little more risk and start lending to entrepreneurs and small businesses?
Well, banking is all about risk. The less risk we do is the more money we make. So as the rates come down, there's more investment and a lot less risk.
So BCB Bank trades on the NASDAQ under the symbol BCBP. If you want to check it out, do a little homework on it. But it's one of these great banking stories. Tom's built a network here of 31 branches across New York and New Jersey. And you guys still take that community bank feel, too, where people could come in and actually talk to you about their business. It's not this huge bureaucracy, right?
That's correct. Anybody could sit down with the president or see Chief Operations Officer Mike Lessler and get a decision within 24 hours.
But do they get a toaster? If they open a savings account or a checking account, will you give them a toaster? That's the question.
Toasters are passe. We're trying to figure out what the millennials want. New iPhones.
Everyone's low carb now. So, Tom, take a look at this tweet from President Trump this morning. He is really unhappy with the Federal Reserve. This is what he tweeted this morning. He said, despite a Federal Reserve that doesn't know what it's doing, raise rates far too fast, even though there's very low inflation and other parts of the world are slowing, lowering, and easing, and did large-scale tightening, $50 billion a month. We are on course to have one of the best months of June in U.S. history. Now, I do have to wonder, does it give you confidence that the president, the man who nominated the current Federal Reserve chair, is saying that the Federal Reserve doesn't know what it's doing?
That's a good one, Frank. In the rising rate environment, what the Fed did hurt the banks in the short run. We need surety. We need time to adjust where loan rates are going to be and where savings rates are going to be. But in a rising rate environment, the savings rates come up a lot quicker than the loan rates.
So doesn't it make sense then, you know, we talk about a lot of our audience here on Newsmax is baby boomers, and a lot of those people are living off their income, their interest on their savings and high yield, maybe equity investments. Don't higher rates make some part of your depositor base a little happier?
It definitely makes our depositor base a lot happier, especially the senior citizens. However, it's not good for profitability for banks, especially regional banks.
So, I'm sorry, the offset of maybe people starting to take money out of the stock market to take less risk and put it in the bank, you'd rather have them in the market and the rates staying lower?
I rather have their money so I could, in a market of surety, I can make a lot more money.
And Tom, you know, John mentioned the baby boomers. There's another type of boom going on right now. That's the construction boom. There seems to be all sorts of construction, mostly commercial, but a great deal of residential as well, all over the country. In your view, what's behind this, and do you see it slowing anytime soon?
I honestly don't know what's behind the construction boom. I know as interest rates, we're getting 6.5 or better on construction. What concerns me, and later on in the banking world, is all this construction, who's going to live there? And when are they going to stabilize? And if people don't move into all this empty apartments, then it poses a risk for the bank.
Well, maybe here in New York and in New Jersey, after you give out all those construction loans at a 400 basis point premium, you could start turning some of them into residential mortgages. I mean, is that a initiative?
It's always an end game for residential mortgages, but construction loans, most companies are renting out. So what you're going to see is a lot of inventory on these apartments, and everybody's going to be fighting for the rents.
I see a lot of these deals come across my desk where people are doing, equity and debt. They're selling investors on, hey, put up this much money to get us in, and then we're going to go see Tom, and we're going to raise this much debt, and the rent rolls will cover the debt, and you'll get this kind of return. And you think that's kind of on the edge of trouble?
Definitely on the edge of trouble. But when we credit underwrite, we shock 10, 15% in the case of high-risk situations, as we talked about.
So these guys at BCB, they traded on the NASDAQ under the symbol BC, BP, Boy Charlie, Boy Peter. Go check it out. Do some homework. This is a stable stock. It's just below its all-time highs, or at least a couple-year highs at $16. This is not a solicitation for you to buy stock. Do not take any financial advice from me whatsoever. But if you need some advice on banking, on personal, on mortgages, on lines of credit, this is the guy you got to reach out to. You can reach out to me. I'll get you in hold of him. But BCB is there for you, and they'll treat you like family. Tom, I want to thank you again for coming down. These are the people that know where the rubber meets the road. We talk to real bankers. He's the CEO and president of BCB Bank. And coming up right after this, we're going to mix it up with Richard Roth and Rich Valdez. Left, right, center, mixing it up right after this. Stay right there. Back in 2.